The upcoming OPEC Plus meeting on June 4 and the expectations for further production policy steps amid volatility and demand uncertainty. The Organization of Petroleum Exporting Countries, OPEC, and its allies, known as OPEC Plus, are set to meet on June 4 in Vienna to decide on their next course of action regarding oil production. The meeting comes amid high volatility and uncertainty in the oil market, driven by various factors such as the pandemic, banking crisis, recessionary signals, and geopolitical tensions. One of the main issues that OPEC Plus will have to address is the impact of the recent release of millions of barrels of oil from strategic reserves by some major consumers, such as the US, China, India, Japan, and South Korea. The move was intended to ease the pressure on fuel prices and inflation, but it also angered some OPEC Plus members, especially Saudi Arabia, the de facto leader of the group. Saudi Arabia's energy minister, Prince Abdulaziz bin Salman, has warned that nations shouldn't use emergency oil reserves to manipulate prices and that losing emergency stocks may be painful in the months to come. He also said that he would inflict more pain on short sellers and told them to watch out ahead of the OPEC Plus meeting. Short sellers are investors that bet on oil prices falling, and hence when an unexpected move by OPEC Plus to cut production causes a rally, they are forced to close their positions at a loss. Saudi Arabia has been one of the most proactive and preemptive members of OPEC Plus, voluntarily cutting its output by more than its quota in April and October 2022, along with other allies such as UAE, Kuwait, and Oman. The April cuts were described as inadvisable by Washington, which had also been critical of the group's decision to cut production in October. The Saudi oil minister said that OPEC Plus would continue to be a responsible market regulator, regardless of any criticism. The question now is whether OPEC Plus will decide to maintain its current production level of 27.5 million barrels per day, BPD, increase it gradually to meet rising demand, or decrease it further to support prices. Analysts at Standard Chartered Bank said in a note this week that short speculative positions are now as bearish as they were at the start of the pandemic in 2020 and that this increases the probability of further production cuts when OPEC Plus meets. However, other factors may also influence the group's decision, such as the demand outlook, the supply situation in other countries, such as Iran and Libya, and the pressure from environmental groups and governments to reduce fossil fuel consumption. The International Energy Agency, IEA, has recently called for an end to new oil and gas investments to achieve net zero emissions by the IEA also sees a deep supply squeeze on the horizon, as demand recovers faster than supply. Therefore, OPEC Plus faces a delicate balancing act between satisfying its customers, protecting its revenues, and ensuring its long-term relevance in a changing energy landscape. The outcome of the June 4 meeting will have significant implications for the oil market and the global economy.